What's going on, guys? Welcome back to the channel. In today's video, we're going to be going over some market analysis. I also have a special guest with me, DB.
What's up, guys? This is DB. Happy New Year. I hope you're ready to go over some charts with Woods today.
First chart we're going to be going over today is Bitcoin. After that, we're going to be looking at some altcoins and then some indexes as well. Let's jump into the charts. So on Bitcoin, I'm going to start off on the weekly here. We're just now seeing a pop out of a range that we've been trading in since November. This weekly is very, very impressive. We have 4 days and 7 hours left until the weekly closes. For me, I'm seeing some demand form here at around the weekly range that we were trading in last week. If we get a closure over this box, that means that any retest, if we were to get any within this box, would be a buy for me. But right now, where are some good entries? We're going to analyze that in just a second. I see right here, we're flipping a decent order block that has started and generated that last move into all-time high. We are looking to flip that box now, as you can see here. That number stands at around 93.2. So in my opinion, if we do get a retest down and a sweep of some candles below these lows down towards 93.3, that for me is a buy for upside targets to smash that 100K level. I think that's where we're heading. I think that's where your opinion should be on the market overall as a whole. We held in some really good structures here with these higher lows being put in. And we chopped around for quite some time before we had this pop up. I'm gonna go down to the daily here after we have our weekly levels painted. You see how this weekly level of supply that I drew previous treated as a good level of rejection before we ultimately pushed back up and flipped this level again, making those new all-time highs. That's exactly what price is looking to do here, except we put in a higher low on the macro to start the year. When I start to move to the 4 hour, there's some things that I like to look at. Like I said, we've been trading in a range ever since the middle of November. Broke down out of this level, held those lows before ultimately flipping it. This is a level that we saw rejected off of to start the year. And we are now seeing a very strong push and spot bidders step in to fuel this move to the upside. Originally, before the most recent pushes up today, I wanted at around that 92.6 level, but saying as how strong we're looking now, at around that 94.1 to 93.6 level, that's gonna be where I'm interested in on the more lower time frame. But again, it's been quite a while since we have seen some good retests. So who's to say that we're even gonna get a good retest on this impulsive move upwards? The smart thing to do was to long over the weekend. We saw rejections happen from this level and we saw plenty of retests thereafter. This was where you entered so that you're not caught chasing. And if you're caught chasing, you got to do so in a smart and meticulous manner. What we saw over the weekend was very easy to get chopped in. It was easy to say you could have bought here, walked away, put your longs below the lows, and go on. Sure, that's what I did. But I also closed pretty early as well. I'll tell you, if you held a position from this middling line all the way up until now, that's very impressive. I, for one, took this position here, had my stop here, and then I was out completely really towards the upper end of this range. And I don't think that I'm wrong for doing so. That being said, when you are scalping, you do understand that you are going to miss moves like this, and that's okay. But like we're doing today, it's important to make a plan thereafter. Now, DB, let's see what you got for BTC as well. I'm interested to see your take, so let's jump onto your chart.
Absolutely, let's do it. So I'll discuss BTC on several time frames. I think first of all, it is important to understand BTC on the 3-day because in my view, the 3-day has been the most interesting chart that has helped with fueling this entire relief rally in the last few days. Why is that the case? Because we've been talking about a 3-day bullish divergence for BTC at around 84 to 80K, which has been the exact bottom. Of course, price action has been a bit choppy, and also because we spent a lot of time during the holiday season in this area. After volume came back after New Year's Eve, we basically started playing out this diversion, which has led to this relief, and we're currently at close to 98K. So I have one area of interest where I would be interested in taking shorts or taking profits on BTC, and that is the 100k zone. Currently the spot bid is pretty strong, which we can see here as well, so not really interested in heavy shorts yet. There's a lot of spot purchases being made on Binance specifically, and I personally don't want to short into that. I think a good area to be taking some profits or to look for shorts for BTC on the greater scheme of things still remains, as I said, at around 102k. Looking at BTC from a weekly perspective, a retest of this area for me has been a plan or a possible scenario for a few weeks now. We're slowly getting into that, and one thing that we have to say and we need to acknowledge as well is that the relief rally has been pretty strong. We now have like a 15% move on BTC, but looking at the weekly, we have to acknowledge that the structure is kind of broken or negative for now, and we need for higher levels a structure recovery. And as long as that is not the case, for me this is the bearish retest area somewhere between 98k and 105k. We have the weekly simple moving average there as well. We have lost this simple moving average for the first time in 3 years. It has been serving as support alongside this diagonal trend line, so this will be something worth watching. If we recover this structure here, then I think we could be going for a new all-time high, but for now the short-term target for BTC after this 3-day bullish divergence remains at around 102k for me personally. In terms of buy zones, you touched upon that slightly in your presentation on BTC. It's a bit tricky to be looking for buy zones because here we are clearly breaking out of this parallel channel, bear flag, whatever you want to call it. I think the 92,593k zone, if given, would be an interesting zone to be looking for longs on lower time frame divergences as confluence, because we have liquidity lying there as well. But I also have to acknowledge this breakout for BTC from this area here, so maybe we would need to look for new longs at around 95k at some point once we see where this is rejecting. An additional confluence that helped us identify a local bottom for BTC has also been USDT dominance. So we did have a 3-day bullish divergence on BTC, but we also did have a 3-day bearish divergence on USDT dominance that WoodsBot helped us identify as well. We can see it on the RSI and an OBV. This was the exact bottom for the market in December, I believe, which was a good confluence to be looking for the spot purchases. Whether that's going to be some form of macro low for the market, we will see, because as I said, the weekly structure for BTC still doesn't look that good. I'm leaning towards a lower high on the weekly, but for now we don't have the boundaries of a potential new trend yet, right? So we still need to establish that, but that's an area where I would be looking for a potential lower high unless that area is recovered. So for USDT dominance in terms of buy zones, what I find personally very interesting, so as I said, 3-day divergence. We have the 50 area now being broken on the 3-day, so this gives an indication that this 3-day divergence could fully reset at some point, meaning it can go to oversold for the index, and that would mean higher prices for the market, right? So in terms of buy zones, what I personally find very, very interesting for USDT dominance is this little green box here around 5.80. Why that is important is because in the last few weeks when the market has been chopping, we have been rejecting off this line, right? So 3 times the 4th retest is coming with a break of this area. So if that's the case, and if we close the daily below 5.85, 5.50, I think we're dealing with a new range for USDT dominance that we can use accordingly for long or short positions. We need to remember that there's a lot of volatility in this market, and there's money to be made on both directions. Not only a rising market is a good market, you need to learn that even a dropping market can be a good market if you're positioned accordingly, right? So for USDT dominance, if, as I said, we've closed the daily below this area, I will be looking for 5.50 and I'll be looking for 5.25 as potential new range lows. And I think if we get any retest of this 5.80 zone at some point, whether we test this area before that or we test this area later on, doesn't really matter. I think this is a good zone to be looking for some long exposure with a very easy invalidation. If you basically find acceptance back above the zone, then I would be cutting longs, wouldn't really be interested in longs. And as long as that's not the case, I think taking new long positions on more lower time frame confluences is the way to go. The reason why I'm interested in these areas per se or specifically is because, first of all, 5.25 is historically a very important level, and because we have been rejecting off this zone several times for many months throughout 2025, right? So this has provided buying opportunities for the crypto market. We broke above that area, had a retest, and then broke out on the index, which basically led to this dump in the crypto market, right? So at some point we could be coming back and testing this, potentially having some form of range lows at around 5.10, 5.20, give or take. Why 5.50 is interesting for me is the 3-month chart. And if we look at the 3-month, you know, I'm a macro trader. I like to look at these things as well, apart from more lower time frame levels.
So USDT, I like your analysis. I agree on everything you said, especially where the levels you had drawn for a deeper pullback on USDT dominance if it were to happen. I like that 526 area a lot. That was the top end of the previous range before we printed that macro high or low that pushed us into the new highs that it's currently sitting at. So if we were to push up towards 108K, like I do think is going to happen, I think that that's a good level to anticipate and target. That 550 level as well is a good level that you mentioned, and it's a good level that I can see being retested and to be looked at as a potential reversal spot for the market. It's important to understand that these indexes help you navigate the market. As of lately, obviously it's been quite choppy, and really USDT dominance is not giving you too much to work with. But all that being said, we're breaking out to the downside out of a block that we were trading in on the weekly. For me, that's a big sign to at least anticipate continuation in the crypto market. If we were to break down fully, that's not guaranteed to happen. So if we were to reverse off of these lows anywhere near or around it, that for me is going to be a sign that we're going to get a pullback on BTC and to bid at around that 95K level, like you pointed out as well. Like I touched up on my analysis, it's not easy to get a good retest on BTC. We even saw this weekend the 90.6K level holding and us not really getting a sweep of those lows towards that 89, 88 level that people were anticipating and were looking to bid. In this move upward, it's important to realize that not all deep pullbacks that you're looking at are going to or guaranteed to be retested. That 93.6 level that I'm looking at might not retest. So the 95K level might have to act as my level to enter on in between, and then I'll get a good entry after it. I would have to look for some lower time frame confluences to stack up for me to do that, but that's what you have to do when you're not positioned for the move thereafter. Your biggest concern is to be not getting trapped in between. You plan the trade and play it accordingly. Now that we talked about USDT dominance, the importance of it, and how we see it going, I'm going to jump into Ethereum. We've already seen what BTC's done, what we think it's going to do, some levels to look out for. Now it's important that we look at, the alts to play with it. And Ethereum is the first one that I just automatically look at. Automatically got to see what's going on. So for me, I'm going to just kind of clean it up a little bit and just draw my levels of interest really quick. This high is what I was looking at before it created the bear market lows. That was a clear level for me. And this low here, painted in 2021, we've reacted around this level for quite some time. So for me, this was a good level for a retest. As of recent, you see how beautiful that level did retest and hold. On the weekly, just like I painted out on BTC, I have this demand forming just below. We saw Ethereum kind of push up later than BTC did yesterday, so it played a little bit of catch up. And for me, if BTC continues to chop around like we saw it do for the past couple weeks, I could see alts really having significant moves. And for me, as long as ETH wants to print this weekly demand and close above it, I could see ETH going for higher targets. We were trading around the exact middle of this support and resistance. So we flipped the wick low here that initially pushed out into this zone. When we flipped that level, we saw a gigantic move upside the previous rejection that we had for Ethereum in the beginning of the year. We completely engulfed that move. That is a bullish reaction and should not be treated as any other way. And we're also seeing spot bidders hopping heavily as well. You don't want to get caught shorting that. On the 4 hour, I'm going to scroll down a little bit more because initially my thought process goes towards we have to target some highs. 34.50 still has some clean highs to take out. On BTC, we saw the adverse. We saw it already take out those highs. Ethereum, that has not happened just yet. If we see some consolidation on BTC, I can see this happening on Ethereum. But where from? We are seeing ETH take out the 4-hour highs that it printed on yesterday's push. We are also seeing some lower time frame divergences pile up at that level. If we start to see acceptance back below 33.10, for me, that means that we can potentially see a retest at 32.20 as long as the lower time frame divergences do not pile up as oversold and begin to give me reason to think otherwise. That could most certainly happen if we see on the 5-minute chart, if we see on the 15-minute chart, and we're not even at the zone yet. So what I do as a trader that's not trading right now is I'm going to set my alert at 33.10 and see what happens there. I'm going to also be interested in bidding 32.20 down to 31.90. That will be my level for a bid and a level that I'm interested, assuming that we front run the newly formed 1-day demand down here at 31.60, at about down to that 30.60 level. That would be a sweep of the whole move, so we shouldn't even really expect that. And for me, I like my two forms of action that I painted above. Either I have three choices. We either hold this 1 hour form of demand right here, right down to our 1-day open, hold easy invalidation longs that are using this as their invalidation for a move up towards 34.50 and then reevaluate from there. Maybe people want to ape in after and push the price up towards 35.80. Maybe we just react off this level and reject to sweep towards our level that we're anticipating right there. Maybe neither happens and we just move towards this level that we just analyzed before. That's my thought on ETH. Let's see what DB has to say.
Okay, so for Ethereum, I was looking at this diagonal trend that has been reclaimed the other day or broken the other day, and we did have a rejection at the 3,300 zone, which was a known resistance area for ETH. We did have a nice retest of this trend line the other day, from which it is reacting positively and now breaking out. I have one concern with ETH though, and that is that we have a daily bearish divergence if we look at the WoodsBot. The thing with this daily bearish divergence on Ethereum is that it can suggest that the price may be capped or the upside may be capped, right? Especially since we have a 2-hour bearish divergence, if I'm not mistaken, within the daily bearish divergence. But on the other hand, we don't have a higher time frame bearish divergence for BTC yet, and it is also not at our 100k zone that I'm personally looking at. So not as a reliable divergence as it usually should be, but it is still a daily bearish divergence. So what I would be looking at for ETH for new long positions, if we don't get a pullback, is that we invalidate this divergence by making a higher high on the second peak of the RSI and by reclaiming this area here, and then we have a potential retest of the zone at around basically where we are currently trading at, right? And we have confluence that we have reclaimed a pretty big resistance area for Ethereum, and then we can buy a retest. If we do get a little pullback, I'm actually also interested in the 3,200 area for ETH. I think there's some liquidity lying around that level as well. So it's basically more or less these highs here that we would be targeting for a pullback, right? Known resistance areas in the past. And if I'm not completely mistaken, we also have some POC levels. So basically very straightforward with Ethereum. Either I would be looking for an invalidation of these higher time frame bearish divergences for ETH, and then a reclaim of this area where I would be bidding a retest and hold that all the way up to 3,800, which I think is my next zone of interest, higher time frame zone of interest. We have a well-known area of resistance here as well. So give or take the 3,600 to 3,800 area for ETH if this divergence on the daily is invalidated. If it plays out fully, we certainly can expect a deeper pullback for Ethereum, because the daily bearish divergence is not something you want to simply ignore. It can lead to a deeper pullback, right? And if we get that, I would also be interested as a first zone of interest at around 3,250, 3,200 for Ethereum, and I would be looking at some lower time frame divergences like on the 15-minute or a 30-minute for a potential long position. So very straightforward for ETH. We either get a pullback from these bearish divergences, or we invalidate these bearish divergences, reclaim this area here. Then I would be looking to enter at around the same area, but with confluence that we did actually reclaim the zone and we did invalidate the daily bearish divergence. And then I think this can actually squeeze quite high, something between a 7 to 12% move in the near term. So this is my view on Ethereum right now, but being patient here for either side to play out. So looking at Total 2, which is the go-to index if you want to have a better macro understanding on the market, excluding BTC. So if you want to navigate Ethereum and high caps specifically, we can see that we're currently trading at a resistance zone at 1.3 trillion. For the index, 1.1 has been a good buy zone, where we also printed a 3-day bullish divergence for the index. So what I'm looking at personally here, similar to ETH basically, we talked about that resistance zone where the daily bearish divergence was being formed. We do have a daily bearish divergence on Total 2 as well, which we need to consider. It's rather weak because BTC does not have a daily bearish divergence, but it is still a daily bearish divergence at a resistance zone. So similar to ETH, I would want this resistance here to be reclaimed, and then you could be looking for swing longs on a retest of this area here. If you look at other indexes like Total 3, which is specific to altcoins, it is important to note the weekly structure, which is very, very similar to BTC. We had a 3-year long uptrend, right, which was respected throughout the cycle with several retests of this diagonal trend line. We found acceptance below it. We lost the weekly SMA. We do have a relief rally in altcoins as well. Now we are below the weekly simple moving average, also printing a daily bearish divergence in this area. So here we also have to say that we need the structure to be recovered. A reclaim of this area here, potentially at 970, 960 billion would be a pretty good signal, which is a weekly close above this candle here. That could open up the way for higher levels on Total 3. As long as that is not the case, I would be a bit cautious short term on altcoins, especially if the daily today closes with a daily bearish divergence. That is not the case yet, because in the last few hours the index has dropped a bit, but you can see here if we close the day above 910 billion, Total 3 basically prints a daily bearish divergence as well. And if you zoom out on the weekly chart, you can see that that is actually happening at a bearish retest area. So that's something you need to consider when looking at for altcoin exposure. For others, which is an index I use specifically for mid caps, so this doesn't include altcoins such as Solana or XRP. Basically, it doesn't include the top 10, right? What we can see here, let me redraw it actually, because this is not as relevant today. What we can see is that the index has been holding a support area, which has been serving as support for the entire altcoin market throughout the cycle. What we also need to notice here is that, and I'm not a big fan of patterns, but we do have some form of inverse head and shoulders here. So I wouldn't be surprised if we do get another retest of the 240, 250 billion zone. And then what we would need to look at is if we can hold this zone again, which would be the 5th higher time frame retest of this area, right? And if this is then lost, the others index would lose a very big support zone, and I think we could target these lows here. So that's a scenario I will be looking at as well. And if you look at the monthly chart, it looks very similar to what we have discussed with USDT dominance. Let me just briefly clean this up. And that is that the index has been trading for many months in a compressing triangle as well. And this is why these monthly charts are important, because they help you ignore the noise and just see where the market is right now. So we have been compressing this triangle, broke down, came all the way to support at 180, 185 billion, where we reacted from. But we now need to clean up the structure if we want to see higher levels. So we did have a monthly bearish divergence. We can see that from the WoodsBot as well. We did have a lower high on the monthly, and we didn't print a lower low on the monthly yet, which is something positive. So I think 190 billion is that monthly level you would be looking at. But still, I think any retest of this 240, 250 billion zone is for being a bit cautious on altcoins, because it could potentially be a bearish retest area where the index could be printing a lower high on the weekly. So very, very important levels coming up for this index. I think it is also printing a daily bearish divergence, if I'm not completely mistaken. Yeah, we got WoodsBot confluence there as well, which is showing us the divergence on the daily on our sign OBV. And again here, as I said, we don't have a divergence on BTC. So whenever we don't have a divergence on BTC, I treat these divergences on other indexes more lightly, but it is a divergence until proven otherwise. And if we are proven otherwise, then we could be looking for new exposure on altcoins on higher levels. But this divergence is, for me, forming at a resistance area for the index. So we would need to see a structure break here for more upside on altcoins. And in terms of buy zones for the index, it depends a bit on what BTC has to offer in the next few weeks, but I would be interested in the 220 area here for more lower time frame scalps. This is a good zone to be looking for some altcoins on more lower time frames, could even print a higher low. And I'm not sure if we get that, but if we do, this would be an area. Or else if we get a deeper pullback, let's say towards 92k for BTC, and BTC dominance picks up, maybe we get even nearly open, but that would just assume a bigger pullback in the altcoin market. So these are the key levels I'm looking at for total 2, total 3, and others. Long story short, we are at very pivotal areas for these indexes, right? We are testing some resistance areas. We're printing some daily bearish divergences. So I would be a bit more cautious on altcoins overall here, especially as BTC is pumping towards 9800k, right? And if we see a recovery of these structures, then we will come up with plans to be buying higher. But then at least you have a confluence that the structures have been improving and that you could potentially target higher levels for these indexes. Thank you for having me on your channel. Always a pleasure to do analysis with you, and I'll see you guys in the next analysis. Stay tuned.
As always, I appreciate your insight. I appreciate you hopping on these analysis videos with me. It's important to realize we just broke out the range. We don't know exactly where a retest is going to come from. Make a plan and be prepared for anything. Let your confluences align. Use indexes just like DB does. He showed you how he does it. I show you what I look at. Happy New Year to everybody. Stay safe, and we'll see you guys in the next video.